In the meantime, IMF and World Bank annual meetings are kicking off in Washington against the backdrop of a major deal changing global tax rules. Kayla Tausche is here. She's got the new details on this. Kayla, good morning.
Good morning, Becky. That's right. 136 nations have negotiated a sweeping overhaul of global tax rules and reached a two-part agreement setting a 15% global minimum tax on companies of a certain size. That would raise an estimated $150 billion from multinationals. And the second pillar taxing 25% of profits above a 10% profit margin for large companies doing business in countries where they don't have a physical presence. And there's an agreement in principle to roll back existing taxes that penalize big companies like Facebook, Apple, and Alphabet overseas and block new so-called digital services taxes on those companies until 2024. Senior Treasury officials say that tariffs on some $2 billion in European and British goods scheduled to take effect November 29th will now be canceled because of that agreement. Now, President Biden is formally expected to agree to these principles with G20 counterparts in Rome, but each country's legislature must also approve them. Congress here will try to pass the 15% minimum tax in the social spending package, but will need a new bill with bipartisan support. That's 67 votes for this digital tax. Countries are hoping to see that language in mid-2022 to take effect in 2023. But Becky, those dates might come pretty quickly considering how much still has to be done.
Right. The idea that you got 136 nations to sign off just based on their administration officials who are going along with it is one thing. But trying to get it to move through all the legislatures, I mean, that sounds like an almost impossible task. And if you have a legislature here or a legislature there that doesn't ratify it, what happens as you try and keep cobbling it back together?
Well, that's still a big question that is up in the air, Becky. I mean, these negotiations among OECD countries took 6 years to even get to the point of this agreement. And now you actually have to put the fine print together. The framework that the OECD released last Friday doesn't include a lot of that fine print because of that very reason that these legislatures are going to have to write the laws themselves. Now, they can differ slightly so long as they adhere to some of these top line numbers. But one thing that could be a hang up here in the U.S. is if lawmakers decide that they want that tax on big tech companies or that profit sharing agreement overseas, if they want that to include also some competitive regulation of those companies too, to cobble that all together into one law, that would be even more complicated. We'll see how they try to attack it next year.